Well, joining us now is Niles Investment Management Founder and Portfolio Manager Dan Niles. Dan, it's great to have you back on Overtime. Welcome.
Thanks for having me on.
So let's start right there, the tech rally. We teased it before the break. You said you're getting more conservative. Do you buy into this rally or no, not so much?
Well, it's managing through the risk profile, right? So for us, we put out a post on July 11th and said, you know what, be careful of earnings season because you've had all this spending on AI, but people now want to start to see some revenues. And what you saw during earnings season was that other than Apple, which is not an AI play right now in the sense of the traditional hyperscalers, Meta, which isn't either, they use AI internally. If you look at the other four that reported, Microsoft, Amazon, Google, Tesla, all the forward numbers went down, every single one. And each one of them was talking about spending a lot of money. And you saw that reaction in the stocks, where if you take the 6 of the Magnificent 7 that reported, the stocks were down 4% the day after. So some of this is just trying to rationalize this. On Monday, last Monday when the market got crushed, we put out that we thought the stocks would bounce in the near term. They have. And I think with this move up, where you've now gotten back all of that carnage from that Monday drop, you got to think through, well, ultimately fundamentals drive stock prices. And when you've got 4 out of the 7 Magnificent 7 that are reported so far taking down numbers, and they're in the AI space, you got to think about that as how much do you want to play this going forward? Because they went down for fundamental reasons, not because of a yen carry trade unwind.
So how does that set us up for NVIDIA later this month?
Well, NVIDIA is a tricky one because we own it. It's one of our bigger positions along with Apple and Meta. And so we have those 3. But I think it's going to depend on what the setup is into that print. If analysts are universally bullish and think that, with all of this spending, the numbers are up and to the right forever, that's a problem. And so some of this is going to be how rational are they getting. Now, the good news is, we have over the last few days seen some analysts push out numbers because of the delays in their newest chip called Blackwell. Some are thinking through what we've seen with some of the hyperscalers and what they've talked about. Because anytime I hear a company say, well, the biggest risk is underinvesting or underspending versus overspending, that tells me they know that they're spending a lot more than they probably should be. And don't forget, these hyperscalers were the same companies that caused NVIDIA to negatively pre-announce in the first half of 2022, before we heard of this thing called generative AI and ChatGPT. And investors just, obviously you don't want to spoil a good story, right? NVIDIA stock's done great, you got generative AI, but these big companies like Amazon, Google, Microsoft, they do go through digestion periods. And that was pretty clear that they're spending all this money, but the revenues aren't necessarily there, which is why all the forward numbers go down. And at some point, they're going to go, you know what, we need to digest some of this spend.
So what are your thoughts then on Alphabet specifically? They had this Google event, launched its first AI-powered Android update. We've got the new Pixel 9 phones. I realize hardware is not typically the thing that moves Alphabet stock, but AI was a big part of the talking points and the messaging today.
Well, you have to ask yourself one simple question, Morgan, which is, do you think all this money spent on AI by the likes of Microsoft and OpenAI will affect Google's over 90% share in search? If your answer to that is yes, then from a longer-term perspective, Google's got an issue. And it was troubling to me that they had a problem with their YouTube business, and Meta was absolutely fine. So I don't like Google. We're short it in full disclosure. And, and I like that match versus a Meta, where Meta's using AI to help recommend videos that you want to watch, and then using AI to help show the ads that are engaging. And they didn't have any problems whatsoever. And so I think that's a pretty good pair in that sense.